It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast as we talk your property news 7 days a week right around the country, up and down Australia. And you can hear us on iHeartRadio, Spotify, of course, Apple Podcasts and Amazon. Thursday morning, just one more day till Friday, November the 7th. And homeowners in Sydney's Upper North Shore have seen greater gains on their property over the past year compared to their Lower North Shore neighbours. This is according to Domain data. Of the top 10 best performing suburbs in the region, 7 are located in the Upper North Shore. Chatswood leads with a 20.3% price surge, bringing the median house price to $3.3 million. But what about the Lower North Shore? What do people think about that, especially those in the know? Well, joining us on our Thursday morning is Adrian Bridges. He is the founder from Atlas on the Lower North Shore there. And good morning to you, Adrian. Welcome to the Real Estate Breakfast this morning.
Morning, Craig. Thanks for having me.
No worries. And 2024, before we get to that sort of split between the Upper and the North Shore, how has your 2024 been?
2024 has been good to us. It was a really strong start, a bit soft in the middle, but we're having a strong finish and overall it'll be a good one.
You're in a very, very desirable location. I would imagine lots of agents probably try and get in there to that market. You probably, as a founder there for your real estate company, have many real estate agents wanting to come.
It's a competitive marketplace. For the reasons I started working here 15 years ago was to get into the higher price point, work in these harbourside suburbs. It takes time, but we're very fortunate to have a good presence in this market, and all the new agents wanting to come here, it keeps you on your toes.
I'm sure it does. Now, this data that we're talking about this morning showing that the Upper North Shore is becoming as popular as the Lower North Shore, particularly due to value for money. Let's ask you, you're in the Lower North Shore. What factors are you seeing regarding that?
I'm encouraged to see those numbers. I grew up on the Upper North Shore, so I can see the appeals in those areas. To answer your question, I see the trend of people moving to the Upper North Shore. Most commonly is the young families. One point I'd make probably on the contrary is I don't think it's purely an affordability issue. I think there's attractive buying up there and you certainly do get more for your money, but it's also it's a big lifestyle move for these young families. People who have either grown up on the Upper North Shore, like myself, who have moved down to these harbourside or beachside suburbs, are looking to get their kids into schools, get into that private school band. And I think that's driving that move as well, and clearly is increasing popularity and demand up there because the numbers don't lie.
Yeah, so you sort of touched on it with the Upper North Shore properties. They offer larger land sizes and more space for a similar price to those on the Lower North Shore. I mean, that's got to be significant and is influencing the market, as you say, for families wanting to move in with a little bit more property.
Yeah, that's right. If I look at Chatswood's median at 3.35 and West Pymble at 2.8 and some of these other properties or average sale prices, you can spend that much on the Lower North Shore and still get a nice family home, 3 bedrooms, semi or small house. But they're going up for that extra bit of land, but I also think to get closer to family and also in that private school band. That's a really big sell for that area, along with the train line.
Now, I don't actually have the data at my fingertips, but I think it's a fair call that if you look at the property prices for the Lower North Shore, since COVID, unbelievable in growth. I mean, people have had massive windfalls on their properties.
Yeah, it's been exceptional. The challenge when you're reading data for the Lower North Shore is the numbers can be skewed depending on how much upper end turnover there is. So for a suburb like Mossman, if there's half a dozen or a dozen sales above 15 or 20 million, that will inevitably increase the median price. For us, we monitor the whole market, and there's been price segments that haven't seen growth since 21 or 22. Most sort of commonly around that $2 to $4 million range has been a little bit stagnant. So there's actually good buying in that level. Anything above 5 million, we've seen anywhere from 10 to 30% growth since the start of 2021. So yeah, that price point's really healthy, which I think is driven a lot by returning expats coming into this area and spending foreign currency. They've been big drivers for us down here, which sadly does price out people who are looking to jump up from semis, townhouses, apartments into a house. They have become a little bit out of reach, which I guess then suggests the Upper North Shore as somewhere to live.
Yes, you raise a really interesting point. So whilst those price gains have been up to 30% since 2021 that you touch on, somebody moving from, say, the UK, they kind of jump ahead, don't they, in mindset for being able to afford those properties because of the exchange rate. The same for people coming out of the US. No doubt you've seen that firsthand.
Correct. Yeah. And for the same reasons that people are moving back to the Upper North Shore to be near families, a lot of these expats have moved overseas to pursue careers. They've met someone, started a family, and now they're coming back to be near their families. And Sydney-based schools, they're certainly at an advantage when they're spending US dollars or pound sterling. They've really dominated the $5 to $15 million price range.
All right, we are talking to Adrian there on the lower North Shore, which does include Mossman, of course. We'll come back after this and we'll talk more upper versus lower.
From first-time home buyers to seasoned investors to breaking property news. Discover the stories behind the real estate. It's time to go back to the Real Estate Vault for this week's property comment.
You mentioned poor communication. It's interesting that people in the game of property management, you would think that there is good communication, but that's not always the case.
Oh, definitely. And I think if you are a first-time investor, you may think that all property managers offer the same level of service. And perhaps you may also think that you'll just go with the agency who sold the property to you, and it might be that just the easiest option as opposed to really interviewing and doing your research. Having good communication as a property manager is imperative to the success of the investment because they're going to be communicating both with yourself as well as the tenants, negotiating and really managing that investment to make sure it performs.
Every week we present so much real estate. Powerful, up-to-date news every morning from 6 a.m. Know your property with us on the Real Estate Podcast.
And it is a Real Estate Thursday, talking your property news around Australia. We've got Adrian with us from the lower North Shore. This whole sort of argument, upper versus the lower North Shore. Now, I just want to touch, Adrian, on the very mixed dwellings that you've got in your market, because there is a bit of a disparity there.
There's a huge disparity from the lower to the upper end. In part, actually makes this area quite interesting because you've got sub-$1 million apartments and then 20 or 30 or $40 million homes. There's just a great diversity in the area.
Now, I want to take a look at the September house price report once again, and this was released last week. House and unit prices in Australia's capital cities. Now, they've hit new record highs, which we talked about, with house prices seeing their 7th consecutive rise and units their 6th. However, growth has slowed significantly. Sydney house prices have now risen for the 7th consecutive quarter. I was talking to Nicola Powell regarding this last week, and this was the comment about Sydney.
But the pace of growth is slowing significantly. It's rising at about half the pace compared to the previous quarter and compared to the same time last year. But the interesting dynamic in Sydney's housing market is units are rising as well, but they haven't seen that deceleration like we've seen for house prices. So it means unit prices are rising, but they've gained a little bit of momentum. And I think that really showcases the affordability barriers in Sydney's housing market.
So there you go, Adrian. A little bit of deceleration in the housing market in Sydney. I'm not sure exactly what you're seeing in your suburb, your postcode, but the units have gone the other way.
Yeah, I mean, look, growth is growth, whether it's decelerating or accelerating. I've seen stats come out recently where they've spotlighted suburbs that have dropped this year, some to the tune of 8 to 10%. Some of those have been in our marketplaces or neighbouring marketplaces, which those same areas went up 30 to 40% off the back of COVID. So if you look at a broader time period from, say, end of 2020 to now, those suburbs are still up 25 to 30%. So I think overall, the market's very healthy. It doesn't surprise me that unit growth is sustained. I think there's a lot of great mortgage products out there to encourage first home buyers and some incentives. The bank of mum and dad, colloquial term, but we see that a lot around here where, the kids are all sort of leaving school or heading into their 20s. Mum and dad are helping them into their first place, which I think is wonderful. And then with rent growth, that's then brought investors back into the market. So I think that apartment sector actually has some promise over the next few years.
Now, you touched on the bank of mum and dad, first home buyers. They're not in the norm buying on the lower North Shore because of the price point, but mums and dads in the area that want their children to be close to them, they do actually assist them in rather large amounts of money to do exactly that, to be next to mum and dad. How much of that have you seen this year?
Look, quite a bit. We've got agents in our business who are really strong in that price point. If I look at the median sale price in Cremorne, apartment sale price is 1.28 million. Kirribilli is 1.575. I think Mossman's in that same mix. So, these are affordable price points if you've got two professionals and then with the help of mum and dad to sort of raise a deposit or a guarantee, the repayments are less than what you would pay for rent now. Some of these rents are just astronomical. It's now become more attractive to buy if there's the facilities and the support for people to do it.
Now, for our investors, where's the hotspot in terms of the pocket that maybe they are buying into at the moment?
Anything close to public transport. So from Neutral Bay, Crow's Nest, North Sydney, the new metro line that's just come in, that's been really popular. That's driven prices up through North Sydney, Crow's Nest and beyond. So I think that's a big driver because a lot of people now, the work from home is sort of coming to an end. So people need to be in and out of the city easily. So that's a big driver. Mossman, probably not as much. That's more of a lifestyle suburb, but it's more of a capital growth suburb. So an investor would look at a lower yield with a prospect of a higher capital growth. Whereas if you're looking for yield, it's going to be closer to your train and metro stations and ferry stops.
All right, well, good stuff, Adrian. That's sort of a bit of a breakdown on the upper and the lower North Shore for our listeners this morning. Thanks for coming on to the Real Estate Breakfast. Enjoy your workday on a Thursday out there, and perhaps we'll catch you another time.
Yeah, my pleasure, Craig. Thanks for having me and enjoy the rest of your week.
From interest rates rising, a shifting landscape, rentals running hot, clearance rates, a tight rental market, we cover it all every morning from 6 a.m. on the Real Estate Breakfast.
If we were to look at dropping that by 50 basis points, we're already looking at $100,000 more. Obviously, every lender is going to be different and every circumstance is different, but looking at $100,000, that's a massive change.
So in other words, if we ended up having a 1.5 point drop, that's $250,000 more that you can borrow.
That is right, and it is an outstanding amount. And keeping in mind, this is looking at income of, say, $75,000 per applicant over a couple. So if income was, say, higher than that, that could be even larger. So massive, massive difference.
We connect you to the best real estate information across Australia. The Real Estate Podcast.